Welcome to the Propertybuyer Podcast, where we explore the world of residential and commercial real estate to help you make better decisions about buying, selling, or investing in all types of property. Join me, Rich Harvey, CEO of Propertybuyer.com.au and multi-award-winning buyer's advocate. Our podcast features expert interviews, market trends and insights, and practical tips for navigating the complex world of Australian real estate. Whether you're a home buyer, a seasoned property investor, commercial buyer, developer, or simply curious about the property market, our podcast is for you. Join us as we share our knowledge, strategies, and experience and help you achieve your property goals. Welcome to another edition of the Property Buyer Podcast. Today we're turning our attention to one of Australia's most iconic lifestyle markets, the Northern Beaches, and in particular, the long-term performance of Manly. My guest today is Jake Rowe, a leading Northern Beaches agent with The Agency, known for his deep local knowledge, strong results, and on-the-ground understanding of what actually drives value in this part of Sydney. Jake has been involved in some of the area's most significant sales and has witnessed firsthand how buyer demand, pricing, and expectations have evolved over time. In this podcast, we'll unpack the rise and resilience of the Northern Beaches market and why it continues to command a premium and what long-term performance can teach buyers and sellers about scarcity, lifestyle, and timing. If you want practical and hyper-local perspective on where this market has been and where it may be heading next, then this discussion is one you'll want to hear. So Jake, welcome to the Property Buyer Podcast.
Thanks, Richard. Thanks for having me.
Pleasure. Great to have you on. So I want to start back just a bit about how you got into real estate in the first place. And I love asking this question of agents. Tell me what originally got you into real estate and how did growing up on the Northern Beaches shape your career?
Yes, I was probably driven by a combination of my father having done a fair bit of property development work, and then my older brother, it's just the two of us, he's 3 years older, he decided to go and do the real estate TAFE course and ended up getting a job fairly young with Colliers Jardine in their commercial leasing team. So when I finished school and had to make some decisions around what I looked like I might be able to do as the next step, I just scraped into the land economics degree at UTS. So it was the only degree that really appealed. Yeah. There was nothing else that was sort of jumping out at me that I thought I wanted to do. Law didn't interest me. Probably wasn't smart enough to get into a law degree, and certainly wasn't going to be a doctor. So, and I've always had I think a sort of a salesmanship style about me. Yeah. So that was just somewhere I guess I fell into that slot. And then luckily having an older brother, he was helpful in getting me a starting role with Colliers Jardine. And so my first proper job in real estate was working there as a what they used to call a gopher, which was
do anything.
Yeah, just someone as a sidekick and knocking on doors and going and looking at tenancy schedules in commercial office buildings, and also I really helped build their database in terms of their tenancy profile across the CBD. I think it was sort of half built and they needed a lot more filling into the gaps. So that was my initial role, and on the phones checking details of lease expiries, so they knew when to chase tenants for potentially moving office or staying put. So it was a fascinating role, and just being on the phone a lot at a young age, you get a lot of knockbacks, no's, and get lost. And
it teaches you resilience, right?
So really good way to cut your teeth.
Fantastic. So it sounds like that's really shaped a bit of your experience, but how has that experience really shaped the way you approach high-end property sales? Has that been a good training ground for you?
I think the discipline of being able to get on the phones and make plenty of phone calls and take rejection and just not having any fear about getting on the phones is probably a huge asset to working, especially in residential real estate, where my whole career I've really had to get on the phones, and a lot of my calls are warm calls where I'm just following up with past clients and people that I've dealt with and done business with. I don't do so much cold calling of people I've never met unless I feel there's an opportunity that there might be someone interested in their property. Yeah. But it was just really good grounding in terms of just not having any fear about chasing someone about a potential opportunity. Yeah. And the high-end stuff, I think, just comes through having been around a long time. And I did chase that segment of the market and really try and focus on trying to sell some of the higher-end properties. And once you've sold a few, it tends to sometimes snowball a little bit, and one leads to the next.
Yeah, great. And you've worked for a number of different agencies over the years. What was the motivation behind merging your personal business into the agency platform, and how's that helped sort of elevate your service levels?
Look, my first part of my career was with McGrath, and that was a great experience. But then hitting my mid-40s, I felt I needed to go out and explore trying to run my own business. So I did that for 5 years, and at the end of my 5-year lease, I thought, even though I'd enjoyed it, I wasn't sure if I was ready for another 5 years of that, going into my 50s and managing staff, which is not the most fun part of the business.
Yeah.
And I mean, during that period, we were voted Boutique Agency of the Year across Australia, which was a great accolade to get. But I just went, you know what, I think I just prefer being a guy that's just good at listing and selling and not having to deal with all the other administrative sides. So the agency was a good fit, and Matt Lewis, who was sort of in charge and running the agency, had been chasing me for since I'd left McGrath to come and join them. Yes. And after that 5-year lease, I went, you know what, I think it's time to have a conversation. And it's been a really good merge and a good fit, and it's just good that, you know, they deal with a lot of the back end stuff. So that's freed
up your time and your energy, you just focus purely on sales and listing.
Absolutely,
That's great. That's what you're best at, right?
Yeah, totally.
Yeah. I've got a curious question. I mean, I would probably badge you King of Bower Street, right? So anyone listening to this podcast, Bower Street is one of the premium streets overlooking the bay. What do you call it?
It's Cabbage Tree Bay, Bower Street, Shelley Beach.
Yeah. So how do you pick up so many listings on that street? Do you live there?
Yeah, grew up in the streets. Had a house there that we bought, I think, pretty much when I was born, and moved in when I was about 5.
So you started letterbox dropping when you're 6, is that the idea? Right?
Well, I actually did for an old agent, Bernie Bergelin, whose family still have an agency.
Bernie's a great guy, yeah.
Bernie passed away about 15 years ago now, but when I was a kid, I used to do letterbox dropping for him, and not just here, sort of all over the northern beaches. And
so you're well known, but how do you pick up those listings? Is it just
just having lived in the street, you bump into people, but it's largely track record.
Yeah.
Selling leasehold title properties, which is half of Bower Street, is an expertise field, and you need to understand the leases and how they work, and be able to explain it to people. And it has a level of complexity that I guess some agents are less in tune with than I am. And I've sold probably 60, 70 of the properties in that section of the street. So just that experience really helps be able to know it like the back of your hand.
Awesome. It's that local expertise shining through. I've got to ask you a broader question, Jake. The Northern Beaches in general, because you've worked not just in Manly but broader, how has the Northern Beaches landscape changed over the past decade in terms of price, demand and the types of buyers that come in?
Yeah, so it has been a fascinating journey, especially I'd say since the market rise. I would say 2013 was roughly a decade ago where things really started to kick. Prior to that, there was about a 10-year period where it was dead flat. From 2003, when I started with McGrath, until 2013, there was literally zero growth in Manly and other sections of the Northern Beaches, because we'd had a really big rise in that mid-90s to early 2000s. So I've seen some really interesting scenarios and I guess patterns in the market where I saw a long period where if you took out the ebbs and flows from about 2003 to 2013, you could pretty much say nothing changed. And I saw a client who bought an apartment on Manly Beachfront that literally had zero growth in that period of time, which is bizarre.
Wow.
But then 2013, right through until I'd say probably the end of 2021, was just an incredible boom time. 2018, there was definitely a flat spell because of APRA making it harder to borrow money. And then 2020, when COVID hit, there was probably a flat spell to a degree, but some residential properties even started to have a bit of movement then, especially houses. And then 2021 was an extraordinary year. I think Manly might have seen 30 to 40% growth.
Well, the Northern Beaches went up 38% in total.
Yeah.
Which is incredible over that COVID period, right? So,
but the changes I've seen as well, segments of the Northern Beaches like DY's had a huge amount of construction where it's just, I think it's improved as a suburb in terms of just the amenities, and transportation's got a lot better with the B line. Manly Vale's also benefited from that B line. Then you got pockets like, I'd say that places like Fairlight, Balgowlah Heights, Seaforth and Clontarf have all had a huge number of knockdowns and rebuilds because it's predominantly houses. So you just see the socio-economics of the suburb gradually climb as more and more new homes are built. I think Balgowlah Boys High School has improved drastically as a high school. That's another factor that I think leads to people being keener to be in a certain suburb when you've got a better high school.
We get a lot of our buyers want a particular school zone. Yeah.
They score really well in their ATAR results, and I always have a bit of a look at the Northern Beaches schools to see who's doing what. And Balgowlah Boys, when I was young,
they
were not too flash, but nowadays, they seem to score really well in terms of their academic ability. And McKellar's always been consistently good. And then I went to St Paul's up on the hill here. They've now gone co-ed, and I feel that they've gone from probably a low point to now really starting to lift their game. So I think the schools around the area also help attract more people and maybe a high net worth person. So you just seen suburbs like Manly's had a huge amount of knockdown and rebuild construction for apartments, which then leads to better retail underneath. And Manly, really, I'd say there's a cafe on the corner of Manly Beachfront, which was done by a guy, David Gray, called Cafe Nice. That was back in the, I think it was like early 90s. And that was the first cafe that offered some outdoor seating in Manly. So that al fresco dining started from there. And Dave and I still talk about it today, where he really was the pioneer and the leader of that. Now it's everywhere. But that alone and that lifestyle and being able to offer that changes the suburbs vibe.
Definitely.
And so when I was a kid, I think, there was some outdoor seating along the Corso, but it's not the same. Now it's everywhere around Manly. Stuff like that.
Here's a question from left field. How do you compare Manly and Bondi, right? What are the key differences, would you say?
I've spent a lot of time when I was younger going and partying over in Bondi with my mates, and I just found the density of the suburb seems to be a higher concentration. Even though Manly has got loads of apartment buildings, Bondi just feels a little bit more intense in terms of just it all feels like it's about 90% of it's at least 3 to 5 stories.
Yes.
Manly has definitely got a bit more of an eclectic mix of real estate, where you got the Eastern Hills got a lot more housing. The flat of Manly, depending on where you are, is sometimes sort of mid to high rise apartments, and then the far section, once you get up to about North Stane going backwards towards Andrew Boyd Charlton Pool, is traditionally more single to 2-story homes. So Bondi to me feels a lot more intense in terms of just the...
And it's a different kind of configuration too. Like at Manly, you do have North Stane the road, which is like 30 kilometres an hour, slow down there, and you've got parking on the front. Bondi's got parking, but you've got the beautiful Norfolk Pines, you've got a beautiful walk from Queenscliff to Shelley Beach and back, which I often do myself. And
it's a bigger bay. Manly's about a mile long. Bondi's probably, I'd say, guessing a kilometre.
Exactly. So it's a more concentration of bathers and swimmers and surfers in one area as well. So there's a bit more spread out. And obviously Manly has the ferry. So you've got the harbour at the other end of the Corso, right?
Yeah, transportation to the city is a huge selling point for Manly. And also Manly, I was asked by a journalist about 7 or 8 years ago about what features Manly had to offer as a suburb, and we talked about walkability. Manly's got great walkability. When people move to Manly, I say, guys, you actually don't need your car as much when you live here, because it's easy to walk down to stuff in Manly, and you can be on harbour beaches or ocean beaches, and if you want to go into the city, it's a pretty easy walk. So for guys that are professionals that work in the CBD, as I used to many years ago, it's a really nice way to travel to work. You sit down, and if you're on the fast ferry, 15 minutes, you read the paper and bingo, you're there. You don't have the start-stop of being on a bus. It's a really pleasant way to go to work.
So just listeners know, I'm not saying Bondi's better than Manly. We're just pointing out differences that everyone wants. So I'm curious to know too that over the last 2 years, have there been any trends emerging in terms of the way buyers and sellers are behaving? Like
buyers agents have grown drastically in the last, I'd say, 3 to 4 years. It's exploded. And I think it probably needs to tighten up, because I think there's too many, and I think some are probably lacking in terms of education and qualification. Suddenly they put on a buyer's agent hat just because they want to be in real estate. And anyway, that's just a natural progression where you'll probably find some will decide that they're not doing the amount of business they'd hoped to. But it is nice dealing with buyer's agents who've got expertise and experience like yourself, because I just find that the process of a sale runs smoothly because they know what we want to be delivered from an offer point of view.
Exactly. Yeah, sure. And what about sellers? Are they kind of got crazy expectations, or are they kind of reading the market and looking at sold results and going, hey Jake, I know what my price is, can you come and sell it? Or are they still got pie in the sky expectations?
I think the world has changed in terms of now it's a much more fickle world. There is not the loyalty that there used to be out in the world, which I'm a very loyal person. I find that very frustrating that people will change agents at the drop of a hat. It is unfortunately still a world in a market where owners are easily duped into believing prices that are unrealistic to list with agents, and I have lost a lot of business to agents that give owners 10 to 20% exaggerated expectations and then come and apologise later for not listening to my advice. I try and give people advice that they need to hear, not they want to hear, which doesn't always work in my favour, but I'd rather go to sleep at night knowing that I've been honest in terms of my opinion, and I think in the long term that comes back to benefit you.
Absolutely, couldn't agree more. So just thinking about the sort of the luxury top end of the market, so let's say sort of 8 million, 10 million plus, what have you seen happening in the last couple of years? What are the key drivers for these kind of buyers? What do they want?
Good sized block, and if you probably now got to go well north of 10, depending on your suburb, to get decent harbour or ocean views. You've probably got to be 10 to 20. And if you want to be, for example, if you want to be front row Bow Street, you're probably now, I would have guessed, minimum 25 to 30. And if you want something that's really beautifully built and finished, maybe a 30 to 40. High side of Bow Street, you're probably more looking more like sort of entry level with limited views, maybe sort of 10 to 15 up to 25, maybe even 30. Then if you go to the harbour side, hasn't been a lot of trades over for a knockdown, say down the end of Addison Road, harbourfront, oceanfront, you're looking at around 15 for a knockdown, so you're probably then 20 to 30 for something built, and then land size will depend on whether it extends beyond that. Go to freshwater, you're probably now, if you're something with great views but maybe not right down on the beach, you're anywhere from, I'd say, 10 to 15. And then North Curl, you're probably looking at maybe something slightly less, and then DY Headland slightly less. So the further away you move from Manly, prices probably adjust down slightly.
Okay, so let's talk about the mid sort of entry point of the market. What are the sort of price ranges? And let's again talk like you did before, from Manly right up to DY. What are you seeing as like a midpoint for the average family trying to buy a home in these? What do they need to spend?
I think if you're just looking for a nice home and a reasonable sized block, but without views, you're probably around 5 mil. I think if you, and that's probably going slightly outside of Manly, if you're looking for something that's a 3-level home with some views of the ocean, you're probably up around 10 to 12, and then if it's a little more flash, maybe it's sort of 12 to 15. I've found that buyers generally, the only way they're able to step up that chain in terms of go to more expensive properties is either they've had a sale of a business where they've made substantial money, or they've just climbed the property ladder through their own assets having grown in value. I think the best place to park your money is actually your principal place of residence.
Absolutely.
Tax-free.
Absolutely. It's a great way to do it. Yeah.
So I did a really fascinating little exercise on my own family property, which is freehold title, Oceanside of Bower Street, which we've owned since I was born. And I worked out over a 50-year period it averaged 13% as an average rate of growth. So there's years when it does zero and even goes backwards, but that was the average.
It's well above the average,
and I've tested it on a few others that have also been fairly prime real estate, both leasehold and freehold, and they did 11. So you can see if you own a prime piece of real estate and you hang on it for 10 years, you're doubling your money.
Well, the average in Sydney, Melbourne, Brisbane over the last 25 years has been between 7% to 8.2% for an average median house price. Apartments have averaged between 5% to 5.5%. So my always message to people, if you can afford to buy a house, get a house, because you're getting a 2% premium. But your averages, you talk about 13 versus 7.5. It's a massive difference, right?
Our piece of real estate is pretty unique in terms of its position and size of land and views and so on.
And the bottom end of the market. So if someone just scraping to get in, what's sort of an entry level for an apartment in these markets?
So you're probably looking for a one-bedder in Manly, for example, is probably about, they can range anywhere from about $1 million up to $2 million if it's something quite special, but generally around 1 to 1.3. Two-bedders are probably starting at real entry level without parking at about 1.5, and I set a record for a two-bedder in Manly at 5.5.
Wow.
So that's quite a broad spread. And then three-bedders are anywhere from probably entry level sort of 2 million, again, that can be up to 20 million. But entry level, you're generally probably, Manly, you're looking at, I'd say, just around the million mark to probably 1.5. Go to somewhere like Freshwater or Queenscliff Freshwater, you're probably a little bit less. You probably might still be able to scrape into the high 800s to $1 million. And then DY, you're probably a little bit less again. DY is definitely the most affordable place if you're going to look for an apartment on the northern beaches, and there's a lot of them. But you've got to be careful when you go to a market where there's a lot of stock. There's probably less potential for growth because there's just a lot more properties always on the market. Really
good point. We'll come back to that scarcity point in a minute, Jake. But I want to ask you just again a bit about Manly's historical performance. You did sort of raise Bower Street, but what are the significant, values have climbed really strongly over a really long time, but from your viewpoint, what are those historical forces that have underpinned that rise in value?
I think people's understanding of what Manly offers from a lifestyle perspective is what makes it attractive and in high demand. That access to the city, as we talked about, is a big one. And also just the change in Manly's, I think, sort of food and beverage scene. Hugo's, I think, really helped put Manly on the map as probably the first restaurant in Manly that really had some swagger about it and was a lot of fun. And people go there for a bit of a special occasion, great level of service. The boys that have now completely taken over with Felons, with Manly Wharf, I think have given it a really good uplift, and I think it's only going to help Manly even more. So I think restaurants and cafes and that sort of thing helps the suburb. And it's just also because you've got Surf Beach on the ocean side and Harbour Beach where it's a bit more protected. It's good for families that have got little kids that want to go swimming on that side versus people that want to surf. And interestingly, the teenagers, I've got twin girls that are now 17, I noticed all the teenagers want to come to Manly. So they always wanted to come and hang at our house. And so I was like, okay, so So I think there's a lot of pressure from teenage kids to push their parents that live at suburbs further away to go, we want to be down there.
Yeah.
And so the parents go, all right, that's where the kids want to live. We want to keep them in our nest. Let's go down there.
Yeah.
And I've seen it happen with friends of my children who've moved down this way.
Yeah. And sort of the thought of the Manly being sort of an old, sort of clapped out pub area.
And it was.
That area is that's changed. That perception's completely changed, right?
Yeah, Manly actually wasn't an expensive place to live when I was born, and when I was a kid going to Manly Village Primary School over here, Manly was, I would describe as a bit rough and even a bit poor. And had a friend who used to live out at Wagga, and they moved to Manly in the 70s, and he said, we moved here because it was cheap. And they bought a petrol station, and they lived up on Cliff Street, which is now, one of the best streets in Manly.
Exactly.
It was really cheap and affordable.
Yeah.
That has especially changed, I'd say, in the last 20 years.
Yeah, amazing. So how would you describe Manly's current market performance? Are we in a right now, so we're looking in the beginning of 2026 when we're recording this, where are we at in the market? We've had massive growth. Are we heading into a plateau? Are we heading into a slow rise? Where do you see us going now in terms of performance?
We've been plateauing, I think, since 2022. So there really hasn't been much change in values, I'd say, in the last 4 years. There's the odd one where it might be a bit of a surprise and you're like, wow, that's a big price. But by and large, with interest rates rising and there being zero likelihood of a rate reduction after recent inflation data, I just think that it's just probably flattened the market out. People are still trading. There's still, I've had some sales that were probably a little bit above expectations. Others are maybe a bit below, and others are about on par. Yeah. So I just describe it as last year we were describing it as a bit patchy, where the results weren't all consistent. Some were up, some were down.
So do you think this year we're going to see a more balanced market, sort of a balance between supply and demand, or do you think we're still going to be short of supply and have excess demand for buyers?
I watch, obviously, new listings come on the market every day on Real Estate and Domain, and there was certainly a good number of listings that came on last week, so that might be a bit of a taste of there might be more stock this year. Some agents and people I know in the financial services sector understand, the economy believe that this year there might be a few people that need to sell property due to their mortgages, their rates expiring, whether on the honeymoon rate from COVID days.
On the high rates,
Suddenly they're on a rate that's 3 or 4% higher than it was, so they might be forced into having to make some tough decisions. So the Northern Beaches, I feel, in the last few years has been undersupplied in stock. So if we see an oversupply, that'll certainly push prices down. Yeah,
pretty unlikely though. I think it's going to be pretty much stable. So I want to ask you about the types of buyers coming in today. Are you seeing any increase in investors or downsizers or interstate buyers? Is there any mix of buyers you're seeing more or less of going through at the moment?
Definitely always less investors when interest rates go up. They tend to look at property as being less attractive when it's more expensive to borrow. Look, the owner-occupier market in terms of where they come from for the Northern Beaches, I'd say it's probably 70% local, 30% out of area.
Okay.
And that mix has probably been fairly consistently like that for the last 10, 15 years. Upper North Shore through to sort of lower mid and upper North Shore, there's always that movement from there down to Manly through to sort of Freshwater to North Kilkeel. I find the eastern suburbs, younger crowd tend to want to be more Freshwater to North Kilkeel. Seaforth, you've always got a lot of Chinese influence, and Clontarf, probably a bit more of that. Balgowlah Heights is a mixture of sort of locals trading up from maybe places that are smaller in Fairlight, Balgowlah Heights. But it really depends on the suburb and the attributes of that suburb. Seaforth and Clontarf and Balgowlah Heights are attractive to people that might want to be slightly closer to the private schools, which are on the other side of the spit. So sometimes they want that geography from A to B to get their kids there. You tend to get bigger blocks in that part of the world with harbour views. It depends if you're more into a sort of a harbour view with boats or if you want an ocean view with surfers and waves.
Yeah, got it. We appreciate you tuning in to the Propertybuyer Podcast, and I hope that you're finding our expert interviews helpful. So that we can keep providing this information and growing our audience, we rely on word-of-mouth recommendations. If you found this information useful, could I please ask you to share this podcast with your friends, family and colleagues, and ask them to subscribe to the Propertybuyer Podcast. It would be a big help, and we'd be very grateful for your support. Thanks once again for sharing the links. And now, let's get back to the podcast. to ask you a bit about the lifestyle appeal of different areas. So we're comparing Manly to places like Freshwater, Queenscliff, Fairlight in terms of price and stuff. But how important are these lifestyle factors in sustaining demand for properties in these areas? Like, give us a sort of a comparison on why a buyer might choose Manly versus Balgowlah or Manly versus Queenscliff or Fairlight.
So you'd come to Manly because you want to, I think, have access to the restaurants and the beaches and be able to walk to it all.
So it sounds like it's more of a downsizer kind of appeal.
I think so. Yeah, look, there are some people, younger families that are just really attracted to that lifestyle, and they're prepared to sacrifice less backyard.
Yep.
Because me growing up, I said, look, your backyard for your kids is really out on the streets and the beach. And,
that's right.
And I've had clients that have moved from Manly up to Seaforth or Balgowlah Heights or somewhere on a bigger block, North Balgowlah, and they want the big backyard and the pool. And they go, Jake, I'm forever driving back down to Manly because my kids are in nippers and they want to be at the beach. We should have just stayed where we were and just not bothered. So that's I've seen that happen quite a bit. But yeah, you go to the places further away, you're getting bigger block of land with a bigger backyard and the ability to have just more space for the kids to run around. But I think sometimes those owners then realise it's not what they thought it was, and the kids don't actually want to use it as much as they thought.
It's funny you mentioned that. It's the journey. I talk about the journey or the vectors that people do, right? I always ask as a buyer's agent, look, what's your sort of lifestyle? How often are you going to school? How often are you going to social events or sporting events? Where's the nearest shops? And like you say, if the mums and dads are always driving the kids to nippers every 5 minutes, it's a pain. Or in terms of
training and competition.
Exactly, yeah, 2 times a week or more. For soccer training, it could be twice and 3 times a week, depending on how sort of committed they are. So all of those things make a big difference. Obviously, you've got the B2 bus line now that goes through. That's made a bit of a difference.
Manly Vale and DY are a couple of pockets that I think have really benefited from that in terms of just the ease of being able to get to the city. And I've got friends that have lived in the city and come over this way or vice versa. They're like 15 minutes sometimes if the traffic's not too bad. It's a great service.
Yeah, fantastic. What constraints do you see in housing supply in sort of Manly and these lower northern beaches here, and how does that affect dynamics when it comes to negotiating on a property?
Well, we're surrounded by ocean and harbour, so you got no growth to build more of. It's what's there. So there's not going to be more subdivisions, and look, there's been an increase in the density of what you can build in certain parts of northern beaches. Manly, especially, they've now allowed certain pockets to now go up to 6 stories. So you might see the density increase here. In terms, it doesn't really have any play on negotiations other than there's just limited supply. So it just depends on what the product is the buyer's looking for. But if it's if it's a home for 20 to 40 million bucks around Manly, again, there's limited owners that are even interested in selling and limited opportunities. And it depends if you want a finished home or if you're ready and willing to knock down something and rebuild. A lot of people don't want to go through the pain of a DA, and I'm in the middle of it all right now doing one myself. And it's a 3 to 5 year exercise, and by the time you're finished, your family dynamics completely change.
Exactly.
So in terms of my discussions with owners, and I guess it's a bit of a negotiation thing, you say, do you really want to be up for this? Your kids are now 14. By the time you finish it, they'll probably not be at home anymore.
Yes.
So they're the sort of things I try and give people insight on to go, it's a long journey and it's a pain in the butt, and so you really want to be ready for it if you're going to go down that path. So I always say to people, you can find a finish home where it's a set, forget, walk in and done, much, much easier.
Much less hassle. That's why they pay a premium, So, I mean, you probably already answered my next question, but for someone considering buying in Manly or the Northern Beaches right now, what's your key considerations they should have before making an offer?
Well, they've got to have their finance in place. They've hopefully, if they haven't sold, they've worked out what sort of a settlement period they ideally need, and that can really be tricky, especially late last year. When you ever get to around November, it's always tough because then you're going to have December, January with no activity. So some buyers need then at least a 6-month settlement to give themselves some breathing space. But generally speaking, 3 to 4 months delayed settlement is something that they probably are going to want. If they've organised bridging, I think that's helpful so that they've got a bit more flexibility on what they can put on the table. Because not every seller wants a long settlement, especially if they've already bought something. But I think finance in place is an important one. And if you're an experienced buyer, you've probably been through that process enough to know what to do. But many times I have to check with the buyers just around their processes with their bank. So can you go and exchange contracts unconditionally without a cooling off? Or what is your process with your... So I always ask them to speak to their broker or their bank just to understand that, because they'll often think they can do something and they can't. Yeah,
they've got an indicative pre-approval, but they haven't submitted some docs, right?
That's right.
They've got the deposit stuck in a term deposit account, which they can't access for 12 months or something stupid.
So that's why I like, if a buyer's agent's involved, they've asked all those questions and
pre-qualified them all.
All ready to go. Whereas buyers sometimes think that they'll say, yep, and then it gets to the pointy end, suddenly they're not as ready as they thought they were. And that's super important in terms of being able to sign on the dotted line. And if there's multiple buyers trying to buy and you're not ready, then you're going to miss out.
Exactly. So flipping the coin, let's talk about sellers, right? So what's the most effective strategies that you would advise a seller to get the maximum price in the beaches market at the moment?
Setting a realistic expectation to begin with. The worst thing an owner can do is bring in 4 or 5 agents and pick the agent that tells them the most money with the lowest fee. That'll normally end up getting the worst result. And it'll end up selling for a lesser price than what they could have got if they were more realistic and started at a reasonable level. You know, with an auction campaign on any property, you're allowed to set a range on an agreement of 10%. I think you just want to make sure that, you know, your range is reflective of the top end of the range is probably where you think it may trade, and the bottom end's where you think it might need to start to just sort of get some traction in the market. I think you've got to be really careful now with the Office of Fair Trading's guidelines around, you know, not only underpricing but overpricing. I think, you know, agents need to be aware now. They can get pinged for telling owners far too much money and buying listings. You can get pinged for that, and I love that. There's music to my ears that came into play, because I'm sick of agents buying listings and then having the tough conversation after things have started. So getting your pricing right at the start helps build traction in the market, which will get you more competition and hopefully a better result that might be above your expectations.
Yeah, love it. No, it's all good. So we're the same with buyers too. Like, buyers come to us as buyers agents, think we're magicians, right? Oh, you can get it from me, 15% under market value. It's like, well, I'd buy it myself if I could, but
not the case.
No, it's all about setting realistic expectations. I mean, a lot of the reason people use buyers agents is because we save them a huge amount of time. We've got that local expertise. We can tap into off-market networks with people like yourself.
I like the fact that you push them to transact. Because they'll fluff around a lot. You need a buyer's agent to keep you
to make a decision,
focused and make a decision. And look, even if it is a case where you might have paid more than anyone else, I look at that opportunity as you're not spending your Saturdays looking anymore, and in 12 months it'll catch up, even if it was a bit over the odds, and you're settled. You're in your home. You don't have to worry anymore.
The other thing we do, Jake, is we're like marriage counsellors sometimes. We're often trying to get both parties on the same page, that the husband likes it, the wife hates it, or vice versa.
That.
And, you know, or other couples, they just can't really agree on anything. So you've got to get them down on the canvas and go, hey, what are we really going to buy?
And I've also had a lot of experience with buyers saying they wanted this, but then they buy something completely different.
Exactly. Looking ahead, so Jake, 5 years from now, what are kind of going to be the key factors that you think will really affect the market, the property market, in terms of values? Is there any sort of more external factors? We've mentioned interest rates, obviously.
That's always the key one.
Migration, or any other big other factors that's going to impact the northern beaches specifically?
No, I don't think migration really has any impact on the northern beaches at all. I think that's a sort of bigger, broader one that's maybe more predominant out west. But here, it's interest rates are the biggest one. And then, you know, if certain suburbs continue to gentrify in terms of offering, you know, better retail facilities, better restaurants, cafes, and other small services like shopping and so on, and transportation. They're the big ones. If you had a really good school that was sort of a hospital that popped up, some infrastructure in certain suburbs, that can certainly help deliver some added growth and attraction to that part of the world. Noticing up at, for example, I sold a property up in Killarney Heights recently, and a lot of the second and third generation Chinese find Chatswood's too expensive now, so the younger ones are now going to places like Killarney Heights. And in traditionally,
what did you sell that property for out of interest, Jim?
$2.5 million. Developer bought it. They're going to turn it into, I think,
I was going to say $2.5 million is a bit cheap for Killarney Heights.
It's land value. They're going to build, I think, 4 residences on it because the zoning allows for that. But yeah, it was just interesting to see that. You know, I think some Chinese like being near things like hospitals. They just think that that's a good thing. And if they're near transportation, we don't have a train line, but if the bus transportation's good, that's helpful for them. And I found that suburbs that have got bigger blocks of land, like Lambie Heights, North Balgowlah, Manly Vale, probably slightly smaller, but they're very attractive for families because they just know that if they're going to either build something on it or find something that's done, they just love that bigger block of land where it's got a bigger backyard. So that really helps a suburb, I find, in terms of price growth. My uncle bought a property in Lambie Heights, I'm going to say it was about 30 years ago, and you know, he bought it for about 400 grand. It's probably now worth $3 to $3.5 million bucks, and I've just seen the meteoric rise because the shops are good, the primary school is good, the block sizes are big, and geographically it's not that far to get back down to things like the mall or to the beach. You can go to anywhere from Manly to DY pretty easily. So you find a lot of the younger ones that maybe grow up in places like Manly to Queenscliff and Freshwater in 2-bedroom units, suddenly have a family.
Yeah.
They got to head somewhere.
That's right.
And if it's got a good local set of shops and a good primary school, it's got a lot of appeal.
Exactly. I want to ask you a couple of anecdotes, if I may. Love to understand what your most memorable or successful sale's been. And tell us how it happened.
Look, I've generally found it's the ones where you price the property conservatively, and you have good marketing in place, and you just set a really realistic expectation to begin with. I had one which is probably more at the higher end. It's back in 2021 when the market was definitely flying and red hot. It was an apartment in Bower Street, quite close to where I live. Nothing else in Manly apartment-wise had sold for more than $11 million. So we started our pricing there. We did from memory, about a 70 grand ad campaign, which is big.
Wow.
A lot of newspaper exposure. The owner just agreed, if you can't just rely on the internet to market a property, if it's at that level, you've got to try and broaden your market and try and reach out to passive buyers that aren't actively looking online, or Manly might not be on their preferred search radar. And we were averaging 20 to 30 groups at each open home, Saturday and Wednesdays. I think we issued, from memory, going to make it up, 20 plus contracts. The auction, I think we had 10 registered, which at that price point's a lot. Sold for 15 and a half.
Wow.
I think our reserve was like 12 or 13 or something.
Wow.
And so it went well above expectations. That was probably one of the more extraordinary ones.
So you got the result because you just didn't rely on the internet, broader campaign. Obviously the COVID period helped, but that was amazing.
And look, there was only one sale of an apartment in Manly that had traded in recent times. I think it was for around 11 or slightly more. So I was just saying, well, that's all I've got to gauge off. That was a bigger apartment, but probably not quite as good a position and not as modern. But it was just good times where with a good campaign and people, I guess, very positive about buying real estate and plenty of money flying around.
That's great.
Went well.
Yeah. I want to ask you about market misconceptions. Are there any common misconceptions about buying or selling property in Manly in the local area you'd like to dispel? Let the people come to you with some weird and wacky ideas and go,
I guess a lot of people don't understand the leasehold title segment of the Eastern Hill, where there's quite a lot of it, and there's different...
Can you give the 30-second explanation of that for our listeners, if that's possible, and what the difference between leasehold and freehold is in Bower Street?
So not just Bower Street, but other pockets surrounding St Patrick's Estate on the Eastern Hill. The Catholic Church owned the land, and they're traditionally 99-year leases that have now run down to much shorter periods. The church is now allowing you to have a lease up to 99 years if you desire, and it's just 1% of the church's valuation of the property, which would buy you an additional year. So 20 years is the minimum number of years you can extend your lease for. So let's say you still had 20 left. Every 5 years, if you want to extend your lease by 20 years or more, you can do so, but at the cost of 20% for 20 years. Or if you had a lot of money, you could go, I want to buy 50% or 70%. It's up to having a total of 99% or 99 years in place. That flexibility and the fact the church have opened that up and made it a lot more years than you could previously buy, I think has helped push their values up because it's more flexible and it means you can not ever feel like your term is limited.
Out. Yes, got it.
Freehold title doesn't carry any of that, but I found because of the exclusivity and the scarcity value of property in that part of the world, it's probably helped push it up to being not that far off freehold values. In terms of buyers' perceptions about buying real estate, I guess a lot of buyers don't understand that real estate agents prefer, when they're making an offer on a property, that they can go and do their due diligence and homework and make that offer without a cooling off, which is what we in real estate world call a 66W form, is a form that's added to your offer by your solicitor, which is a one-page document that effectively waives the 5-day cooling off period, which you wouldn't do unless you'd done all your homework. But first-time home buyers often don't understand that and have never experienced that and are a bit shy and scared of doing it. But from an agent's point of view, that's what we prefer because we don't like the 5 days of unrest of knowing whether it'll go through or not.
You've got to do more inspections again. No, good answer. Are there any pockets on the northern beaches that you think are flying under the radar, that you think are kind of poised for growth in the next 5 years? Like any pockets that are kind of going to really been missed by buyers that are going to have, that area there is going to go really well?
I remember years ago, I actually did say to some friends to look at spots with bigger blocks of land. So Cromer was one that I said to my friends about 15 years ago. I think that's undervalued.
I actually had that word in my head just before I asked that question.
Yeah,
There you go.
and I sold their place actually last year, and it went really well. So I think I still think that's a little undervalued. But generally speaking, I think all the other suburbs on the Northern Beaches are generally in line with where they should be. I think Narrowena is a suburb that traditionally, 20, 30, 40 years ago had a bad stigma associated with it because there was a lot of housing commission up there and I think a bit of crime associated with that. I think now there's not much of that left, and just the socioeconomics even of that suburb have jumped to a level where, entry level's probably now getting up to, 2 million plus. So I think that's another pocket that's probably...
I totally agree with Cromer and totally agree with Narrowena.
I think Beacon Hill also, which is quite close
just right, bordering Narrowena. Like both those, like Cromer I call it a sleeper suburb, right?
Yeah.
It doesn't have a massive shopping centre. It's got a few little tiny eclectic groups of shops and a bit of light industrial around there, but great for families, great big flat areas for kids to ride bikes around. Narrowena, you get some beautiful blocks with views, as you do in Beacon Hill, but I think, as you say, and it's really easily, great access to both Northern Beaches Hospital and the beaches, anywhere you want to go. Yeah, no, really good suggestions, Jake. What do you think are the pros and cons of working with buyer's agents? You mentioned that you like working with buyer's agents, but for the average buyer out there, what do you think are the pros and cons of maybe working with a buyer's agent?
It probably depends on your own experience and how knowledgeable you are about real estate and your time availability. If you're time poor or if you're not in the area, if you don't live on the Northern Beaches and this is where you want to buy and you're from somewhere else, I just suggest, their local knowledge is invaluable to just help you not make mistakes, not do anything dumb, and just not pay a price that was stupid. There's a lot of stock that now gets offered off market where buyer's agents tend to get first crack of the whip in terms of agents ringing them before anyone else. So you're probably going to get more exposure to stuff that you weren't aware that was for sale that you will if you engage a buyer's agent. And look, whilst you pay a buyer's agent a fee, you're paying for freeing up your time, not doing anything stupid, for them to, dot the I's and cross the T's. And just, I think, speed up your process. Where, with a buyer's agent, you'll fast track things to get it done, I would have guessed, in 3 months. If you look yourself, you can be fluffing around for a year and say, I still haven't missed out at 3 or 4 auctions, and then you'll end up appointing a buyer's agent then.
And then the market's already moved 5%, right?
At least, maybe 10.
Yeah. So to your point about time frame, like we buy on average between 30 to 60 days. Perfect. That's our average turnaround. So 1 to 2 months from the time they engage us with the buyer's agency and by the time they exchange, it's 50 days on average. Yeah.
And I think that's what you want. You don't want to... And I think often a buyer might see a property they really like early on in their search and then look back and go, I should have bought that one. But if they had their hand held and they were better prepared, they would have jumped and made the decision.
And they'll see comparisons. That's what the buyer's agent will do. It'll show them comparisons. Say, hey, this one works well. Even though you haven't said a lot, we know that this one works well. So
I had a situation last year where a buyer's agent put a property to the client who was from Singapore, said, this ticks all the boxes, you should buy this. And the husband unfortunately stalled and said, not sure, don't think so, no. Still regretting it today, a year later.
There you go. I'm going up to Singapore in a couple of weeks' time to meet some buyers over there. Last question for you, Jake, before I let you go. Do you have a particular personal philosophy or approach that you bring to work with you that you find resonates with your clients?
Be really transparent, open, honest, give people plenty of information, be patient. Understand that different people have different time frames and different speeds at which they want to operate. Be really adaptable to all of that. And adaptable to, I might be dealing with someone who's 21 and buying their first property to a couple or a lady or a gentleman who are in their 80s and things need to go much slower. You're looking at the disc of personality types and just trying to be really adaptable to everybody. But I just find if you're consistently honest and provide plenty of information, then hopefully that stays with you as someone that everyone knows they can trust.
Fantastic. So I've been speaking with Jake Rowe, partner at the agency at Manly. Jake, thank you so much for your
thanks, Rich.
Information and just your insights today. It's been really, really good. So thank you very much.
Thank you, mate. Cheers.
Thank you again for listening to another edition of the Propertybuyer Podcast. I'm Rich Harvey, and we look forward to seeing you on our next edition. Bye for now. Thanks for being with us on another Propertybuyer Podcast. If you have a question you'd like to ask, please click on the SpeakPipe link and we'll answer this during the next episode. If you're looking to buy a residential or commercial property in the near future and would like to get the added advantage of having a buyer's advocate on your side, then please reach out to my team today and send us your inquiry and we'd be delighted to help. Please visit our website at propertybuyer.com.au where you can stay updated with all my latest market updates, weekly blogs and live suburb profiles to help you make better property decisions.
We look forward to connecting with you again on the next Property Buyer Podcast.